Yo, hello, 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 hello. Testing the sound. Seeing everything is good. Okay, seems good. Alright, guys. So the news just happened right now. It's ADP, whatever. This is a common thing that just happened. So I'm in shorts for this: the pound against the dollar, the euro against the dollar. Um, yeah. So basically, what I'm trying to say is the news just happened, and a lot of the times there's another news as well right now in 10 minutes. A lot of the times the news will take out the highs like it just did now, and then the next news brings it back all the way down, if that makes sense. Um, so this news right now could just be the one that takes out everyone's stops, and the next news could be the one that takes a dump, and goes the right way, well, the way that I think it's gonna go. Um, you know, so yeah, I'm just waiting to see what's gonna happen here in a second, and all these trades I'm in. I could be wrong, to be honest. I do have a level here as well, and some of the stuff, but I'm just waiting to see what happens. Um, I have a feeling, this next news could dump a lot. But yeah, I'm just calling out right now just in case it does happen. Still in some of these other trades. We're actually down right now. We're down like £1,000, so it's not really the best day right now. But things could change. Things could change. I'm open to things, changing. Oh, USD CAD's holding nicely though. Oh, okay. But yeah, we're down 1,100. We're down right now. So yeah, every trade's down except for this USD CAD of 1,200 now. It's getting worse, guys. But but yeah, let's just see what's gonna happen. And yeah, we'll see what happens. We'll see what happens. And oh wow, that euro pound. I get to see this euro against the pound. I was buying it from here, and I did catch some trades on it, but I was trying to really catch the long move, but I just took the profit because at the time I was like, oh man, I was calling it for swing and day trade, so I do both swing trading and day trading. And at the time I was like happy with the profits. I put a decent lot size on this as well every time it dumped, and I just catching, I don't know, a decent amount of pips. But there is a long trade going on with this one, like a big, like at least here. I think it's gonna go up actually higher, but like at least in the short term. But but anyways, it's alright. It's alright. What's going on here? Pound against dollar. What's this? Gold. Yeah, we'll see what happens anyways. But I do think I might have the wrong side of the trade going on. But I'm alright with that. I'm gonna just stick with everything I'm in. Oh, gold just hit my alert. But yeah, it looks like the dollar is dumping hard. Um, yeah, just gonna wait and see. I'm gonna be patient. But yeah, I am taking an L right now. Some of these trades, I got the wrong side of the trades, but if you're patient, sometimes things work out nicely. Just gotta be patient. Gold could be making an all-time high today, by the way, just to let everyone know. Like it could be making an all-time high today. I am prepared for that. I just hope it doesn't do it, but I am prepared. Um, yeah, gold could be making a new all-time high, so watch out. And also there's 8 minutes to this candle closing, so just to let you guys know, a lot of people took trades in this range. This candle just wiped out everyone that's selling, so you got to think about it like that as well, like so yeah, this candle to close and see what happens. Yeah, okay. We'll see how everything goes on. So, hmm. Let's see. There's the new news is in 6 minutes as well. So yeah, I wonder if this literally just broke the high just to go down on gold. But like I said, I could be wrong. I don't. I'm not right a lot of times. I just make more money than I lose money. But yeah, yeah, we'll see. We'll see. See what's gonna happen. Yeah. So I don't trade news like that, guys. I actually do believe that news just follows the technicals. So interesting. What's happening here? But yeah, it's unemployment claims, so I don't really know if it's gonna be a big deal. We'll find out, I guess, soon. But if you look at what's going on, for example, like this EURUSD, which is the dollar basically, I can go to the dollar index. We're kind of in this just range, to be honest, and we broke the low of this range. And we got this area over here that I think could be filled. So it's just a bit like, are we just gonna be in this whole range, and then is this what's gonna happen? That's kind of like the idea I've got in my head, until NFP, which is tomorrow. And then you get both people who got their stops on both sides, and just I'm just thinking of how the market maker's trying to think. Um, but different things always there's always different scenarios on this on the NFP. There's always different scenarios. Sometimes it goes both ways, sometimes it goes one direction. Every different things happen. These indices look bearish though. Yeah, that's about to break the low. I was gonna buy this earlier actually, but then I was like, you know what, this could actually go lower. So I do think these could go lower. It's a bit dangerous to sell it right now though. I mean, with the stop you can do it, I guess. Yeah, yeah. This could be the high of the day right here on the Nas. The market opens in an hour. I'm not really the best trader when it comes to the indices, but I do trade them sometimes if I see the setup and stuff. Like, look at this gold, bro. It's just ridiculous. Look at this. It's melting back down now. Look, I was minus £1,000. I think I'm minus like £900 now. 950. It's my personal number. I do have a funded account as well that I'm trading. I'm down like probably like 2,000 on that one. That was like double the risk. Everything's double the risk. So yeah, like this is just ridiculous what's going on right now. Yeah, I want this pound to go below this line over here. If it goes below this line, then we're kind of good. I just know like the way this price action is kind of weird. Well, pound CAD broke the high. This was expected. I thought this high was gonna get broken, but we just need to go back below this line again. I feel like I low key got in a bit early on some of these trades. That happens. That's why I scale in and stuff. Wow, this is crazy. That EuroCAD is interesting. That EuroCAD is pretty high right now. Wow, that EuroCAD is high. Wow, interesting on EuroCAD. Very, very interesting on EuroCAD. Wow. Interesting. And as we'll have a look at this gold. We'll see what happens. I gotta check the chat quickly, guys. See, What's happening? One second, guys. Someone's chatting, ask. By the way, guys, feel free to ask any questions and stuff. Yeah. Hold on a second. What's this? Oh, okay. Oh yeah, my camera's off. Yeah, that. Ah, yeah. There you go. My camera's back on now. What's up? So yeah, okay, the news just hit. Let's see what's gonna happen. Let's see what's gonna happen. Are we gonna get out of this drawdown? I don't know. Are we gonna get out of this drawdown? I don't know, guys. Pound CAD's going up. Not much movement, to be honest. Not much movement. Not much movement. I mean, we technically have reduced this drawdown by £400, but still, we're still in a drawdown, so it can get worse again. We're still not out of anything. Anyways, I'll minimize that for now. Let's put some Bloomberg on.
On the S&P 500. And if you bring up the bond market at the front end of the curve, yields were a little bit higher going into ADP. ADP came out, downside surprise, bonds start to rally, yields drop by up to 4 basis points. This number drops, yields start to unwind some of that move. We're down now only 2 basis points to 373. And this is why about 30 minutes ago we opened up this hour and we all said, this is how finely balanced things are going into payrolls. We are one bad print away from pricing in a string of 50 basis point rate cuts and one good print away from seemingly unwinding some of the moves over the last month or so.
And the lack of clarity in the economy is really just sort of unprecedented in many ways. I keep thinking about this, and Mike, I'd love your take on this. I keep thinking about what the difference is.
Okay, yeah, it
how
looks
big
like we're
the
gonna
delta
keep
is
going
between
up
not
by the
hiring
looks
a
of
lot of
this.
people
I think
and
I'm
actually
wrong.
firing people. And it seems like even in the beige book, people aren't hiring people as so readily unless they're going to try to replace a role. How connected is that as a step to then laying people off in this sort of not linear trajectory, but very predictable trajectory?
Well, it's definitely a semi-predictable trajectory in the past in terms of when you go into recession. First thing you do is you cut back on workers' hours. So we'll be looking at that tomorrow to see
I'm back in the
if
drawdown.
hours worked cuts back at all. You cut back on temporary workers, and we saw that in the ADP report today with professional and business services falling by 16,000 jobs. So those are signs that things could be happening. But everything has been so weird since the pandemic, which we keep saying and saying and saying. You've got people here wondering, are we normalizing because we had such a strong labor market, or are we going down and the Fed needs to take emergency steps to stop it? Throw in 2 other factors. One, it's September. And so the markets
Yeah, gold could make a new all-time high today.
Every September,
there's a good chance.
and we're seeing that.
Gold's gonna make a new all-time high.
And then you have the election.
I mean, I don't want it to.
People who are saying,
I hope it doesn't.
what happens
But
with the election before we make any business spending plans. So with all that together, you can imagine sitting around the table at the Fed and trying to balance all that out
It's
and
tough.
deciding what you're going to
Don't
do.
be surprised if
Said
it
on the
does
show,
make a new
though,
all-time
for
high.
months now,
Just don't be
we've
surprised,
asked
guys.
the following question: are we seeing a welcome cooling or an unwelcome deterioration? And after Chairman Powell's speech, at least in the near term, I do wonder whether
I
that's
don't know
a
what
distinction
Bloomberg are
without a
talking
difference
about.
for them, because he has now come out and said, we don't welcome any cooling at all from here. So if you get any further signs of cooling, and arguably we're still seeing it, it's just setting them up for action, isn't it?
Well, it's going to be very interesting tomorrow because we have John Williams, who's vice chairman of the Open Market Committee, and we have Chris Waller, who's sort of the intellectual center of the economists on the Board of Governors, who are both speaking. We'll get their views after the jobs number comes out. Actually, Williams is speaking as the jobs number comes out, so I hope the folks at the Council on Foreign Relations have their Bloomberg on their phone, you know,
On
right
one of
in
those
front of them
monitors in
when
front
it's
of it.
happening. Yeah, exactly, to ask him about it. But it's their last chance to send a signal because the blackout starts on Saturday. So if they are worried and they don't want the markets to overreact one way or another, they'll hopefully tell us.
You nailed it. We've all got it circled. Governor Waller, 11 a.m. Eastern time tomorrow morning.
I'm laughing because I'm thinking of John Williams with two speeches, one of them with big in red. Good jobs report.
Yeah,
Next
of
one,
course.
bad jobs report.
Two edits.
Two edits. And it basically, he's looking at the Bloomberg. It's like, okay, all right, which one? And that's essentially maybe how we're going to get messaged.
You just get a marker pen and start scribbling out methodical and gradual. Just take out those two words, right?
Seriously.
Mike McKee, thank you. Appreciate it. If you've missed the last 15 minutes or so, 20 minutes, we had the wrong kind of downside surprise on ADP, 99 versus an estimate of 145K. We had the right kind of downside surprise on jobless claims. Jobless claims came in at 227. The median estimate was 230. I said earlier, if you walked into a room of economists, you'd walk back out confused. If you look at this data this morning, you're not getting clear direction either. Jay Bryson of Wells Fargo is challenged with solving some of these issues. Jay, what is going on in the labor market in America?
Well, John, I mean, I think you kind of talked about it before. I mean, you know, what we're seeing is we're just not getting as much hiring as we had before, and I think that's consistent with the ADP number we got this morning. But we're also not seeing businesses laying people off, and that's consistent with the initial jobless claims number.
Gold's
So,
pumping
you know,
high.
the labor market has moved back into better balance, which is a good thing. Things are slowing down in the labor market, but you know, and I think Lisa used this word earlier, you know, you're kind of on a knife edge right now, and you know, you don't want things to deteriorate further from here.
Jay, what gives you confidence it won't? Is there any reason to be confident that things stabilize?
Yeah,
That this isn't just
gold's
a moment
probably
in
gonna
time,
make
it's
a
an
new
end
all-time
state
high, guys,
for the
today.
rest of this year.
Saying good.
So I think there's two things, John, that things kind of stabilize here, and you know, recession is not the base case call. One would be, if you look at the financial position of households in
lot of people's stop losses just got taken out right now, and a lot of these trades. Gold's still booming up. That one I don't have under complete control with gold. I'm just gonna wait, but everything else, this is starting to come back down. This is starting to come back down. This is starting to come back down. This is starting to go back up. Everything's going the right way except from gold. I do have a big position size on gold, to be honest. I do think I do have a bit of a big one. Yeah, 1, 2, 3. I have a 0.8. I do need to deal with the gold position. But if everything else goes the right way and oil goes the right way, then it shouldn't matter. But I prefer if this trade goes the right way as well. Just give it a second.
America, or potentially a more likely recession, which is Andrew Hollenhorst over at Citigroup. It highlights how disparate people's opinions are, not just of the headline number, but how you read that through to an economy that's still hanging in there, and whether that actually does kind of undermine this idea that everyone's betting on a soft landing.
The 2-year right now is not betting on that. It's betting on something worse potentially, at least in terms of the price action of the last 3 days. We're not even 3 full trading sessions into September stateside. We've had a move of almost 20 basis points.
That pound is starting to go down.
2-year. Kathy Jones, a Charles Schwab.
Pound is starting to pound down. Okay, okay.
Why do you believe that all roads
I like what I'm
lead
seeing
to lower
on the
yields
pound.
from here?
I don't got like 2
Well,
lots on the pound.
fundamentals just tell us that, John.
If this pound goes down, it'll
we've
be
had
nice.
the weakness already in parts of the economy,
Come on, man.
manufacturing
Look
in
at that.
particular, but also
This is what I'm trying to say, yeah.
evidence of some slowdown in
This
consumer spending.
this is divergence.
But
All of this
also
is
you have the whole
divergence.
global
Like
picture
this
right
over
now.
here,
So
slight
you've
break of the
got
high, slight break of
weakness
the
in
high, slight
China,
break of this high.
translating into some
It's
weakness and
divergence, baby.
softness in Europe, particularly in Germany in the manufacturing sector. Collapsing commodity prices, that's really been notable in the last couple of weeks. It's been
I
notable
wonder if
for
it's
a
the same
while,
with
but
gold though.
really seeing those industrial materials
Man, I feel like gold wants
come
to take out
down.
these highs.
And then you get to the
That's the only
U.S. where
problem.
policy is restrictive.
The gold's got a bit
The
different
Fed
structure.
has
Same thing, you know,
already
it's
sort of
against the dollar, but it's just a
pre-indicated that
bit of
they're
a
going to
different
cut
structure
rates.
because it's got these.
What's going to send rates
these
higher
annoying
from
highs
here
over
would be
here.
the question I would have. All roads seem
It's
to
alright
point
though.
to
It's alright.
Fed easing, lower
These
rates,
indices look like they're
and
gonna
more
go lower,
disinversion of the
100%.
yield curve.
Like this looks like
Then
it's gonna
if you
break that
extrapolate
low.
that out, Kathy, how
Break
much
this
lower
lows,
can
yeah,
they
yeah,
go
these
if
lows are
you
gonna
really
get
do
broken.
see this as a more inflationary moment than pre-pandemic?
Know what's gonna happen with this oil. This oil is
Yeah,
pretty low,
you know, I
but
think the
it can actually go
the
lower.
terminal rate,
That's the
nobody
thing.
really knows where that is.
I'm
Right?
in buys,
Everybody's
but
guessing, and that estimate's going to move around based on whether we hit a recession or whether
Stick to the plan, stick to the plan.
are able to pull off a soft landing. But we'd say Fed funds rate at 3% is kind of a base case scenario for us. It doesn't give you as much room as you go out the curve for yields to fall in the Treasury market,
Man,
but
I'm
there's still
hungry
a
as well.
substantial distance between 5.5% and 3 or 3.25% in the Fed funds rate, which is where we think we're going.
We've been talking a lot about how credit markets have been very behaved, and they've been working in tandem, frankly, with stock markets in terms of continuing to gain, even though there are these concerns about a weakening labor market. At what point, at what data levels would you start to get concerned about credit quality at a time when perhaps there are a number of people talking about this being a little bit more pernicious than just a soft landing?
Yeah, I think we've been fairly cautious about credit, probably too cautious in this cycle about credit, wanting to stay up in credit quality because of the concern that we'll see some spread widening, and spreads have been so low. We are seeing some widening, say in high yield, you know, triple C's are greatly underperforming other parts of the high yield markets. You're seeing a little bit of dispersion there. In the investment grade market, I guess I would be concerned if we had a real solid recession indicator that came out, you know, negative employment growth, that kind of thing. But this is, we've talked about this, Lisa, many times, this is a different cycle when it comes to credit. Borrowers have been able to refinance their debt if they need to. There's been plenty of money available to do that and push out, term out the debt over a longer time period. So we're not looking for a big blowout in spreads, but we do favor staying up in credit quality.
Hey, Kathy, I just want to finish with the yield curve, slowly normalizing. And as it normalizes, whether it's easier now to convince people to get out of cash. When you speak to the Charles Schwab clients, what are they doing?
They have been moving out. We've been on this bandwagon for quite some time, fortunately. So those who have taken the leap, I think, are feeling pretty
Oh
good
wow, that
about
drawdown's
it.
going down.
We're not favoring
Shit, man.
long duration at this
1.2k to
stage of the game.
700.
I think we've missed enough of the move at the long end to
I'm
suggest
so
that's
tired right
not a
now.
great
I feel
idea
like I need to go
unless
to the
you're in a
gym.
laddered strategy where you're just spreading out your maturities over
This is
time.
kind of boring.
But we
I'm not
still
gonna
think
lie
there's
to watch.
opportunity and money
I
to
feel like
be
I've got it
made
the right way. I just need
in
to
the bond markets as
wait.
yields
I
come
don't
down.
really like to wait in
But
front of the
yeah, a lot
screen.
of clients have
So I might
already
just
kind of
go
moved
to the
out the
gym, have some
curve and
food.
taken that.
Because I know this is going to
They're
go
finally
my
listening.
way.
Kathy, thank you. Appreciate the update.
That's the
Kathy
thing.
Jones there, Charles Schwab, going into payroll.
I think I'm pretty
tomorrow
sure I'm
morning.
right.
Before we talk more about the jobs data and a week ahead, let's give you an update on stories elsewhere.
But I
Here's
just
your
kind of
Bloomberg
want to
brief
teach you
with
guys, show
Danny
you
Berger.
guys
Hey,
as
Danny.
well what I
Hey,
do.
John. Verizon says it will buy
For the
Frontier
ones that are watching.
Communications
I don't know
for
who the hell's watching, to be honest.
$38.50
If
per
you're watching
share.
this, just
It's
say
a
hello.
$20 billion deal with a 37% premium to Tuesday's close. Frontier bills itself as the largest pure-play fiber internet company in the U.S., so that combination would help Verizon offer high-speed internet more widely.
I love how in the news they always say Trump buying crypto, Trump pro crypto, Trump crypto this, crypto that, good news for crypto, but crypto is just going down every single day. Like, but the news just keeps telling people to buy it, really. It's just kind of funny, man. Trading is a funny sport, you know. Man, I'm really hungry right now. Mm. I'm gonna go get something to eat. I'll be back in a second. Yo guys, I'm back. Yeah, the drawdown is
Thank you, sir, for coming on. We've got to do this again soon. Mark Hypothesis there of Evercore ISI. Tomorrow
drawdown's coming down.
is going to be a single issue program. It's the payrolls report, and here's the lineup. Jay Poloski of TPW, Priya Misra of JP Morgan, Mike Collins of PGIM Fixed Income, Torsten Slock of Apollo. The guesses. Can we call them the guesses? I think we can. The estimate, the median estimate in our survey, 165k. The previous number, 114. Looking for the unemployment rate to drop back to 4.2 from 4.3. The number tomorrow morning. We'll see you then. Thank you very much for choosing
Yeah,
TV.
looking good.
Was Bloomberg Surveillance.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes
Big
on
moves on
Capitol
Wall
Hill
Street.
as
Big
Democrats
moves.
and
Big moves.
Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news
Inflation.
with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason I love thinking about black swans, and at the office everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
The names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interest, and whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
All right, market reaction kind of blunted after a little bit of a disappointment on ADP. 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak. And I'm Katie Greifeld. Bloomberg Open Interest starts right now. And coming up, investors are weighing mixed readings on the labor market ahead of tomorrow's highly anticipated jobs report.
As NVIDIA's wipeout fuels concerns, the AI trade gets another test. Broadcom is reporting after the bell today.
Plus, from Verizon's broadband push to U.S. Steel drama, we've got a roundup of today's deals action. So all that and more coming up. Let's take a look at where markets stand 30 minutes until the bells ring.
pretty interesting trade here, even though we're not talking about big movements. The S&P 500 down about 0.1% after that weak ADP print. Initially dropping to session lows in the pre-market, now coming up a little bit. The NASDAQ 100, though, your big tech under more pressure here, down about 0.4%. A little bit of movement in the bond market, a little bit of a rally, Matt Miller. You take a look at the 10-year yield, currently lower by about 2 basis points.
Yeah, Shanali's watching that to get down to 370 and break. Take a look at this chart. In the blue, you'll see economic surprises, and they have been softer. ADP was soft today. I guess you could say that initial jobless claims was a little bit stronger, but really bang in line. Nonetheless, we continue to see an upward trend in stocks with those soft economics as investors hope for rate cuts from the Fed.
I literally screamed at my desk after that ADP's report. But let's watch some pre-market movers before we talk about the macro here. Because single name news for sure. Verizon agreed to buy rival telecom company Frontier for about $9.6 billion in cash.
You know what's interesting? I feel like everyone thinks that there's going to be a rate cut, and I think there will be a rate cut. So everyone knows there's going to be a rate cut, and the cuts are, and the rates are going to keep going down. Why is everything going down? Like, I'm just wondering, you know, like why are all the stocks going down? Why is crypto going down? Assets are just going down. I don't know. It's interesting. They should be going up, right?
We are also keenly watching. We had the jobs report from ADP, and you know, in normal times, we don't really give it a lot of time. However, this morning there was a little bit of a disappointment, and initially markets dropped.
Initially, and now we're kind of back to where we started. It's interesting if you take a look at the movement around Fed cut pricing. We're about 50-50 as it comes to a 25 or a 50 basis point cut coming in the next couple weeks. We're still there. So this didn't really move the needle, but it did raise the stakes for what we're going to hear tomorrow.
After that ADP data, the reason I screamed is we watched the 2-year barrel right down to just near 370. It popped right back up just a little bit. But Matt makes a point. Since we started this show, you have the 2-year down a full percentage point since middle of summer, Katie.
All right, let's get a little bit more into the weeds here. Michael McKee, Bloomberg Chief International Economics and Policy Correspondent, joins us now. And, you know, we're processing every piece of data that comes across EcoGo, obviously counting down to the big daddy tomorrow, the non-farm payrolls number. What was your take on the labor market with what we saw today?
Well, we're seeing what I talked about on Tuesday, that everything that we get feeds into the narrative that people will try to explain tomorrow at 8:35 when the numbers are out. It's all about that. And the ADP report,
Nothing happens in the next hour.
give us a clean read. The jobless claims numbers,
I'm just going to call it a day and leave my trades on for tomorrow.
we did not. If you take a look at what happened with
Yeah.
initial jobless claims, we get 227,000. It was 232 the week before. This is the lowest number in the summer. And the white line there is the non-seasonally adjusted number, and you can see how it has fallen tremendously, and that suggests no layoffs. Now, those red boxes are around July every year. This is what happens. We get this dispersion between the two things. We get a jump in the jobless claims numbers for the seasonally adjusted, and non-seasonally adjusted go down because of layoffs. So we don't get a reading on this that really tells us a lot about where the economy is going, other than it's not in crisis. Then you take a look at the ADP numbers, and I did not scream like Shanali, but they did get my attention. My eyelids rose, I guess. You look at the ECAN function on the Bloomberg, and you can see here what happened, and what the Fed may be concerned about is the orange boxes are service industry jobs, and you can see the trend just going down, down, down. This is the weakest service industry numbers in about a year. So if service industries are not hiring anymore, then that could be a problem, because they are the biggest drivers of hiring. And that's what we saw. Now, ADP has been forecasting manufacturing job losses for some time that haven't occurred. And we did see that again today, them saying 8,000 jobs lost. But it's the professional and business services that will catch people's attention, because you do start laying off temporary employees if you think you're going into a recession, and that was down by 16,000 in their number. Information services down by 4,000. So some categories that could be problematic tomorrow to keep an eye on out of ADP, whether or not they prove accurate in the actual level of jobs created.
All right, Mike McKee, we will see you 24 hours from right now as we parse through what Matt Miller says is the Big Daddy jobs report. Let's bring in Lisa Shallot now. She is CIO over at Morgan Stanley Wealth Management. And Lisa, you take a look at the market reaction to this ADP print we got. Of course, initial jobless claims coming through as well. At this point, I don't know what would be good news for the market at 8:30 a.m. tomorrow. What would be the best possible print to actually maybe breathe some life back into the bull market?
So I do think that it's hard to know what is going to please this market. To your point, we have half the folks looking for a weak number that pushes Chair Powell to go 50, and the expectation is that that's the good news. Alternatively, you have half the folks saying, look, if we're really going to get a soft landing, that means a slow Fed and a stable labor market where consumption holds up. So look, we're in the soft landing camp. We're looking for a solid jobs creation number. Hopefully we come in right at the consensus, and that means a market that starts to broaden, right, and suggest a Fed that is going to be measured and go somewhat slowly. That may not be great, for some of the tech high flyers, which have started to swoon a little bit. But it should be, decent news for, the core of the market in financials, industrials, and energy stocks, for example, that should do well if we get this slow and steady, moderate soft landing.
Lisa, what about a slow and steady rate cutting cycle? At the end of the day, there are a lot of doubts that are hanging around that a 25 basis point cut, or even 2, or even 3 for that matter, in the next, let's say, 3 to 6 months, would make much of a dent in then moving some of these consumption numbers forward, given the weaknesses you're already seeing in the labor market. How much do rates need to go down to really stimulate the economy?
Yeah, so this is, I think, one of the biggest controversies because, this has been an economy where higher rates have had an impact, or the rate-sensitive parts of the economy have been much smaller than historically and very concentrated. And so the question of whether a slow and steady Fed or a soft landing Fed is going to help housing, whether it's going to help small businesses, whether it's going to help the low-end consumer, whether it's going to help commercial real estate, I think the jury's out on that. And what that might mean is if we get a soft landing, we have a mix in the market that's very similar to what we've had over the last couple of years, and small caps don't catch up, and we don't see a big cyclical trade, if you will.
So it is the small caps, it is the cyclicals that you expect to react most favorably to rate cuts. I was going to ask, in terms of industry groups, which sectors do you want to be long if you say you had a crystal ball and you knew they were going to cut 50 basis points?
Yeah, I think kind of the bigger the Fed goes early, the better that's going to be for recharging, the more cyclical, more small cap, more rate sensitive pieces of the market. Again, our view is that the Fed's probably going to be slow and deliberate, and that may be painful for some of the folks, who are looking to employ the traditional quote-unquote rate cut playbook.
And Lisa, with your role as Chief Investment Officer, I'd like to get your cross-asset view right now, because especially earlier in this week, we were worried about that yen carry trade unwind again. That was used to maybe explain some of the jitters that we were seeing, especially in some of the big cap tech stocks. How much weight do you put in that argument? I mean, is this a real force in this market, or are we perhaps using this as a scapegoat?
No, we believe that it has been large and it is a real force. It's more of a technical positioning force, but it is not, that trade is not fully unwound. And so I do think that this is going to be a lingering pressure until we get more clarity on the pace from the Fed. And so it is a risk that is out there, and that risk probably contributes to volatility and plays out in terms of vulnerability for some of the most richly valued parts of the market, which, as we know, has been in tech.
Lisa, there has been a lot of conversation about concentration in this rally into those large cap tech names for the majority of this year, much of last year as well, from what I remember. So on the way down, what does that look like? If the concentration has been loaded into those names, then is there a risk that those names can see a bigger drawdown?
Absolutely, right? These trends tend to cut both ways. And so one of the things that we've talked a lot about with our clients is the value at this point in the cycle of potentially moving away from that market cap-weighted index, where those concentration dynamics have been so profound, moving more to an equal-weighted index to mute what could be a little bit of an outsized sensitivity on the way down.
Lisa, great having you on the program. Thank you so much for joining us. Lisa Shallot there, Morgan Stanley Wealth Management Chief Investment Officer. Quick check on futures as we head to break. We are looking at unchanged S&P futures, but that masks the volatility that we saw this morning when the ADP jobs number came out. We saw a big drop and then a recovery after the initial jobless claims. NASDAQ futures still off almost a third of 1%. Russell 2000 futures up. Let's get a look at some of the stocks moving ahead of the opening bell. For that, we go over to Abigail Doolittle. Abby?
Well, let's start off with the stock that's really tumbling here in the pre-open, pre-market. That is C3AI, down about 20%. Now, there's a big bearish short interest on this stock. But what happened here was, despite the fact that there was overall revenue growth, it was due to services, not software. Software subscriptions came in light, and therefore this big move lower. But again, lots of bears already on that stock. Now, speaking of AI, if we take a look at the shares of Hewlett-Packard Enterprise, we're going to see that they're down 5.4%. The AI contribution to the quarter that they just reported, it was strong, but it was offset by margins due to weak server business. Therefore, investors right now selling that stock down 5%.
Yeah, sorry guys, I'm just so tired right now. Mic was muted. But yeah, I just came back from Italy yesterday. I was traveling Europe for like a month. It was really fun. But I'm like extremely tired, like exhausted right now. But I'm like on the grind. Like I just want to make some money. I'm back. But I feel like I do need to take a little bit of a break. But
they're not quite brave enough, and maybe some banking relationships that they're holding.
I miss the gym.
And then, who knows? Maybe the rating gets boosted.
This drawdown's coming down, up and down, it's hovering. I think I'm gonna be good, but it's just I might have to hold it until tomorrow. We got New York open in 15 minutes, and then got news. I think at 3 p.m. Oh no, 3 p.m. the red news, PMI or something like that. So yeah, we got 45 minutes until something's gonna happen.
I love the Cybertruck. You have to get one with winter tires.
I find them to be heinous, but I admire the company for going ahead with it. Like no other company in the world would make that thing.
I need a Cybertruck podcast from Matt and Hannah.
Hannah drove it, and she's tuned into my podcast, Hot Pursuit, with Hannah Elliott. You can find it on Apple Podcasts or wherever you get your podcasts. Abigail Doolittle, thanks very much for that. Coming up, skepticism rising about the AI trade on Wall Street. We're going to go over to the left coast and talk to Ed Ludlow, co-host of Bloomberg Technology. Broadcom's coming out with earnings. That could be a reset. This is Bloomberg.
We invest in, buy, and own the backbone of global economy.